services closer to underserved populations. It is now being reinforced by broader technological developments, including digital credit, digital trade, and evolving MSME financing models. So, ladies and gentlemen, this progress points to an important shift. The next phase of digital finance will not be defined by payments alone. Across our markets, the basic payment infrastructure is increasingly in place. The opportunity now lies in building the next layer of value. And what are these next layer of value? Digital credit is one. Merchant payments is the next. Then embedded finance is another one. Supply chain finance is next. And of course, cross-border services. So financial products that respond to the realities of women, to MSMEs, young people, and the informal sector. Our challenge is to create the conditions for this next generation of financial services to grow responsibly and, of course, at scale. The constraints we face are now clearer, and the issue is no longer access alone. It is fragmentation, it is cost, and it is uneven regulatory alignment. The challenge is no longer building systems, it is connecting them. What is required is a greater clarity in how we define our priorities and stronger coordination in how we implement them. So in this context, regulation must remain firm, it must protect the public, it must safeguard the integrity of the financial system, and it must preserve stability. At the same time, it must be enabling. It must support responsible innovation and allow markets to develop in a structured and predictable manner. Regulation and growth are not opposing forces. They must reinforce each other. Now, to tell you a bit about the Bank of Ghana's approach. At the Bank of Ghana, we have taken a deliberate approach. Our objective has been clear, and that is to build a regulatory and market environment, that supports innovation while maintaining stability and trust. This is reflected in the steps we have taken to strengthen the framework for digital finance. And let me name a couple of them. Advancing the regulatory regime for virtual assets. Next is issuing guidelines for digital credits. Then the third is progressing open banking. The last one, of course, is supporting cross-border fintech activity. So these are not isolated initiatives. They are part of a coherent effort to ensure that the financial system evolves in a way that is structured, that is predictable, and that is capable of supporting innovation at scale. However, the work ahead is not only about issuing laws, guidelines, or frameworks. It is about strengthening the service infrastructure around regulation. Processes have to be clear. Submissions must be trackable. Decisions have to be timely. This is how confidence is built. Confidence will also depend on the strength of our digital identity and our KYC frameworks. Weak authentication increases fraud risk, it affects credit quality, and it undermines trust in digital financial services. So the next phase will require stronger coordination across institutions, improved data quality, and more robust identity systems. We must also focus on the development of indigenous firms in this endeavor. Africa's digital finance ecosystem must not only grow, it must mature. Firms with strong potential must have access to the partnerships, capital, and infrastructure required to scale sustainably. A strong financial system is not defined by activity alone, it is defined by discipline, it is defined by transparency, and it is defined by competitiveness. So, ladies and gentlemen, the value of this summit will not be measured by the conversations we just have, but on the other hand, by the outcomes we drive hereafter. Stronger alignment across markets, across the sub-region, better coordination across regulators, and faster progress towards financial systems that are inclusive, that are innovative, and that are capable of operating at scale. This requires deliberate action from all of us regulators, industry, and partners alike. And the question before us is straightforward. Will Africa simply adopt the next phase of finance, or will Africa help to shape it? That is the question before us. Africa has reached a point where participation is no longer the ambition. Leadership, on the other hand, is. The answer will depend on how deliberately we act, how effectively we coordinate, and how consistently we execute. So on this note, ladies and gentlemen, I welcome you all to the second edition of the 3I Africa Summit, and I wish you productive and impactful engagements. God bless Ghana, God bless Africa. Thank you very much.
It's a day after his birthday, and his leadership continues to inspire and shape a forward-looking sector for Ghana with clarity, experience, and empathy. Please help me celebrate the Governor of the Bank of Ghana, Dr. Johnson Pandit-Isiama. Belated happy birthday, and may God bless and keep you always. Thank you for that foundational keynote on enforcing Africa's next frontier in digital finance. Excellencies, ladies and gentlemen, we now move to the impact of partner leadership in the future of digital finance. Here to give us that keynote is the Chief Executive of the Ghana Interbank Payments and Settlement Systems. Make welcome Mrs. Clara B. Arthur.
Good morning. Her Excellency, the Vice President of the Republic of Ghana, Professor Jane Nano Poku-Agyeman. Good morning, Madam. The Governor of the Central Bank of Ghana, First Deputy Governor, Second Deputy Governor, governors from other central banks, CEOs, our partners here, ladies and gentlemen, I welcome you all to this morning's session. It's a pleasure to welcome you to Ghana for the 3I Summit on behalf of the Ghana Interbank Payments and Settlement Services. This summit reflects a shared ambition for Ghana, which the governor has just spoken about, and for Africa, for us to build a digitally connected financial future anchored on innovation, investment, and impact. For Ghana, it signals our commitment to digital finance as a driver of economic transformation, and for Africa, it represents an opportunity to strengthen cross-border systems that unlocks growth at scale. GIPS is a proud partner in the Bank of Ghana, as well as the Global Finance and Technology Network, to deliver this year's summit. Our participation is grounded in the conviction that resilient infrastructure combined with strong and intentional partnerships is essential for the future. A few days ago, I always like to set and give some context when I have such an opportunity. A market woman in Makola, which is our commercial market in Ghana, for those of you who are visiting us for the first time, was asked how she preferred to receive payments. Without hesitation, she said, mobile money. She did not ask whether the sender was issuing from a bank account or a wallet. She simply expected to receive the money without delay. That expectation is a result of interoperability, enabled through collaboration between GIPS, financial institutions here, mobile money operators, fintechs, and the Bank of Ghana. What that moment represents goes beyond technology. It represents trust, access, and progress. And this underscores the focus of my remarks this morning, welcoming you all to this session, the impact of partner leadership in shaping the future of digital finance. Your Excellency, distinguished guests, when GIPS was established by the Bank of Ghana in 2007, the vision was for GIPS to lead Ghana's payment systems transformation through the development of interoperable infrastructure that connects all players in the ecosystem, reducing cost of delivering digital financial services. Today, the vision is a reality. Through platforms such as the National Switching and Processing System, the GH-Link, the Nobestic Card Scheme, Ghana's instant payment systems, mobile money interoperability, check code line clearing, direct and debit systems, we have built a connected ecosystem that enables seamless financial transactions across institutions. More importantly, we have done this in partnership with industry under the regulatory guidance of the Bank of Ghana, ensuring that our infrastructure continues to evolve in line with the needs of banks, fintechs, and service providers. Your Excellency, as the industry evolves, we recognize that sustaining this progress will require deeper collaboration and leadership guided by innovation. And this is why GIPS is taking deliberate steps to strengthen our infrastructure and support the ecosystem, working closely with our partners to advance Ghana's Cashlight agenda. And in this regard, we are migrating Ghana's national payments infrastructure to the ISO 20022 Global Messaging Standard. This migration is strategic, repositioning us for the future. And by adopting this standard, Ghana's payment systems will speak the same language as the world's leading financial infrastructure and markets, enabling richer transaction data and faster settlement. With the passage of the Virtual Asset Service Providers Act, GIPS is looking to collaborate with virtual asset providers to ensure we provide the required shared infrastructure that allows for innovation, growth, and regulation. Beyond Ghana, we remain committed to collaboration across Africa. GIPS is ready to connect with other instant payment systems across the continent because the future of digital finance lies in cross-border interoperability. Distinguished ladies and gentlemen, as the infrastructure provider, we see our role as an enabler to provide the rails upon which our partners build solutions that expand access, drives usage, and deepen financial inclusion that impacts the financial health of every Ghanaian. In closing, Your Excellency, the story of digital financial services in Ghana is at the core a story of leadership and partnerships. It is a story of institutions choosing collaboration over fragmentation, shared progress over isolated successes. This approach has transformed our payment ecosystem, delivering faster transactions, broader access, lower costs, and stronger trust across the industry. GIPS remain committed to deepening these partnerships, working closely with regulators, financial institutions, and fintechs to continue enabling innovation and growth. To conclude, it is always important to state, when leadership is collaborative, partnerships are intentional, digital financial services moves beyond systems and delivers real impacts. And it ensures that every Ghanaian, like the woman I mentioned in Makola, has access to financial services. And that is no longer a barrier, but it's a given. I wish us all today a successful and impactful summit. And once again, Akufo-Addo to Ghana, and have a good session. Thank you very much.
Ladies and gentlemen, Madam Clara B. Arthur is the CEO of the Ghana Interbank Payments and Settlements Limited. Please put your hands together one more time. Thank you for the impact of partner leadership in the future of digital finance. As a matter of fact, this lays the foundation for our next keynote on future-ready fintech, lessons from Africa and Asia. But the Vice President has to take leave of us, so we'll jump straight to her keynote. Oh, Madam. Ladies and gentlemen, with joy in our hearts, let's please make welcome the gift of the occasion, the Vice President of the Republic, as she delivers the final keynote on shaping Africa's integrated digital economy.
Please respectfully take your seats. Please allow me to refer to the protocol established and to say good morning to everyone. Good morning. Thank you very much. On behalf of His Excellency John Dramani Mahama, President of the Republic, it is a pleasure to welcome all of you to Ghana and, of course, to Accra. I hope it's not your first time, and if it is, it won't be your last time. Welcome to Ghana. Distinguished ladies and gentlemen, for decades, Africa has been described as a frontier, often by those looking in. What matters now is not so much how we are described, but how we organize ourselves to compete, to integrate, and to build at scale. In that light, another label, that of Ghana as a gateway to Africa, must make clear that a gateway is not just a title. It is a system measured by whether transactions clear, businesses connect speedily, and markets operate with certainty. Ghana's position rests on decades of political stability, a commitment to openness, and a decision to host the Secretariat of the African Continental Free Trade Area. Today, it is not only about proximity to ports or the volume of goods that pass through them, but also who builds the rails, sets the rules, and can sustain confidence in an evolving economy. It was Dr. Kwame Nkrumah who reminded us that Ghana's independence must be linked to the total liberation of Africa. It is still valid. Economic sovereignty now also depends on integration, particularly digital integration, because this is where value is created, exchanged, and controlled. From traders to smallholder farmers to software engineers, participation increasingly depends on the ability to transact, be identified, and operate across borders. Africa has already demonstrated her capacity to leapfrog legacy systems. Mobile money, digital identity, and financial technology have shown what is possible. The task is to move from pockets of progress to continental scale. And the integration of our digital economies requires these four things: payment, identity, regulation, and of course, infrastructure. First, payments. In many cases, intra-African transactions are still routed through financial systems outside the continent and denominated in third currencies. This adds costs and delays and undermines the very idea of a single African market. Through platforms like the Pan-African Payment and Settlement System, some progress is being made. The AfCFTA Digital Trade Protocol, adopted by the African Union, assembled in 2024, provides a framework to reduce this friction through mobile money interoperability, cross-border electronic processes, and integration with regional settlement systems. The objective is for a Ghanaian enterprise to be able to invoice a Guinean client and receive payments in cedis directly, efficiently, and at a reasonable cost. Second, identity. No digital economy can function without trust, and trust begins with identity. Today, large numbers of Africans remain without verifiable digital identities. This excludes them from formal systems and limits their ability to engage cross-border trade. Interoperable identity systems are therefore essential to unlock participation at scale. Third, regulation. Integration does not require identical laws across all countries, but it does require compatibility. Fragmented regulatory environments increase the cost of doing business and discourage innovation. The Digital Trade Protocol provides a basis for alignment, but this work must be carried forward with discipline. Regulatory sandboxes, shared standards, and practical coordination between jurisdictions will make integration real. Fourth, infrastructure. None of these ambitions can be sustained without the underlying capability. Too many Africans remain offline due to cost, coverage gaps, and skills gaps. Africa also represents a small share of global data center capacity. This has implications not only for performance, but also for sovereignty. If our data is stored and processed elsewhere, then even when we participate, we lack control. Investment in broadband, cloud infrastructure, and digital systems must therefore accompany regulatory and policy alignment. Distinguished guests, without disregarding the challenges before us, we must still seize the opportunities. Africa is the youngest continent in terms of population, and technology adoption is accelerating. The next phase of global digital growth must be shaped in emerging markets. Africa is well positioned to play a defining role, particularly in cross-border trade and in applying technology to agriculture, health, education, and public services. Ghana stands ready to contribute to this effort to ensure that integration is not only discussed in Accra, but also demonstrated everywhere. And I believe you agree to that one. Thank you very much. To that end, allow me to announce a concrete step. Ghana will work with everyone, Rwanda, Zambia, and other partners, to pilot a continental digital trade corridor. This pilot, which will be implemented, tested, and measured, will focus on mobile money interoperability, mutual recognition of digital identity for cross-border KYC, and harmonized electronic invoicing. Distinguished guests, the systems we build will determine whether Africa participates in the global digital economy on her own terms or operates within frameworks defined elsewhere. And integration will be achieved through systems that work consistently across borders and at scale. The work before us is what we know we can do. And I welcome all of you once again to Accra, and thank you for your kind attention.
Ladies and gentlemen, the Vice President of our Republic, Her Excellency Professor Nana Jane Opoku-Agyeman. Your Excellency the Vice President, would you be kind as to please stay with me as I invite to join you for a few photographs some of our principals. Ladies and gentlemen, please be seated. Humbly I invite the Governor of the Bank of Ghana together with his two deputies. Followed by the CEO of GIPS, and then our partner all the way from Singapore, please make welcome the GFTN, the Global Finance and Tech Network Solutions, a subsidiary of the Monetary Authority of Singapore. The second photo would include all governors and deputy governors of sister African countries. And finally, representatives from our sponsors, MTN and Jumo. Please join for the last photo. photo later on with all our sponsors. But for now, I ask that we all rise as we observe the national anthem of the Republic of Ghana and see the Vice President of our Republic off. You, the Vice President of the Republic, for gracing this occasion for us. May God bless us all. Please remain standing as the Vice President and her party take leave of us, after which we shall continue with the rest of the program. Ghana Police Band, we're all yours. Seated. Excellencies, ladies and gentlemen, thank you very much for being with us for the first part of the opening ceremony. We still continue. Just gone by was the Vice President of our Republic, together with the Governor of the Bank of Ghana and the CEO of GIPS, laying the foundation on the theme that we're reflecting on today. It now falls to our partner, I'm talking about all the way from Singapore, the Global Finance and Tech Network Solutions, to also lay another foundation to our reflection today. Would you please make welcome to speak to us the CEO of this great organization, yours and mine. Okay, she'll join us shortly. Right after this keynote, we shall have a fireside chat with our partner MTN. It will be virtual on the screen, and thereafter we shall have a panel discussion bordering strongly on the theme that we're reflecting on today. Thereafter we shall break for coffee and tea, and when we do come back, we shall be shown our respective breakout sessions. Today we have 3 breakout sessions which will be running concurrently, and our ushers are on hand to assist you to your relevant stations. Ladies and gentlemen, there's enough to keep us engaged for a full day, and I pray that we all commit our attention to make sure that we achieve the objectives we've set out to. Excellencies, ladies and gentlemen, it would have been very appropriate for us to have a foundation from the lessons from Africa and Asia before we delve into the final keynote by the Vice President of the Republic. However, we can still reverse the process and gain actionable insights from this theme. Here to walk us through the future-ready fintech, make welcome the Chief Executive Officer, GFTN Solutions, Maha El Damaki.
Honourable Governor of the Bank of Ghana, our gracious host. Honourable Central Bank Governors, Deputy Governors, CEOs and distinguished guests, ladies and gentlemen, good morning. It's a real pleasure to be here in Ghana with all of you for what is bound to be a very productive 3 days full of insights, intelligent conversations and discussions that can move the African continent forward when it comes to the 3 I's: innovation, investment and impact. There is another I that I would quite like to add actually here, and that is implementation. We heard about it already in the previous speeches. Something that we are hearing is needed in this new age of new innovative technologies descending upon us at a pace and a speed we haven't seen before, and potentially, having the ability to rewire how we live our lives. But Africa is no stranger to innovation. In fact, in the past, this continent has shown us how to embrace innovation and to leapfrog legacy systems, and indeed to be a model for the world. From mobile banking that enabled financial inclusion for everybody to agent banking that reached remote areas of the continent, this progress has been impressive, and it's one that we've all learned from. And in fact, many other jurisdictions have taken a leaf from your book. So, statistics speak for themselves. You can see on the screen. 66% of global mobile money transaction value is from Africa. Sub-Saharan Africa has the highest number of adults with mobile money accounts. So what is next? Well, of course, everyone is talking about artificial intelligence and the possibilities of AI improving productivity, creating new opportunities, and solving perennial problems that we haven't been able to solve before. The impact of it is on healthcare, biosciences, manufacturing, and of course financial services, and that's just to name a few, and that impact can be significant. So for Africa, and according to the African Development Bank, this could be a $1 trillion opportunity in 2035, and that is increase in GDP. The urgent yet responsible deployment of AI has the potential to create 40 million jobs by 2035. Even in conservative estimates, it is predicted to increase GDP by $250 billion. This is a significant opportunity that cannot be missed and certainly cannot be ignored. The good news, though, is that the continent is already seeing developments that are making an impact using AI technologies. Here in Ghana, companies are building facial recognition software that can support digital identity, but using more diverse data sets, and therefore it's much more appropriate, to the context, adapting to local requirements. Also, AI in Ghana has been used in payments to improve access and services. It's been used across the economy, in fact, in areas of farming, pharmaceuticals, and other industries. And it's not just the case in Ghana. It's actually the case across the continent. Many governments are setting their AI strategy for their countries, and there are many cases across various industries, and indeed in financial services we are seeing a lot of use cases using AI technologies, where we see applications that enhance the user experience and reduce costs, such as chatbots for customer service, or those that reach wider markets in investments and savings, such as robo-advice, or lending and credit facilities for a wider market, a wider target market, such as AI for better credit scoring, where you could use more diverse data sets and reach more target markets such as the informal sector and MSMEs. Or indeed applications that enhance the integrity of the financial system and protect consumers, such as in the areas of fraud detection, compliance and risk management. All these and more make services better and more accessible, and they build on what digital infrastructure there is today. So this is the good news, but there is more to be done. And here are some interesting data points. The Oxford Government AI Readiness Index suggests in 2025, Sub-Saharan Africa had the lowest average digital skills score. North Africa and Middle East were one cluster on the index, and they were tracking against world average, around 40% or so. But let's be clear, this is not the entire story. The development of AI is indeed uneven across the continent. There are some excellent forward-looking initiatives across the continent that I've spoken about and that you've heard about through the earlier speeches. But many still grapple with infrastructure, with governance and with skills shortage. And I believe, even though there's a lot to be done, I believe that this is the opportunity for Africa to take a leaf from its past and act today, and this can be done in a few ways. First, and by the way, all of these are interconnected, they go hand in hand. First, policy and regulation to support new technologies. How is the regulatory environment supporting financial innovation ambitions? How are you supporting firms wanting to innovate? Is regulation an enabler or a blocker? And how can innovation support the right use cases, knowing that there are risks and we need to balance the risks and innovation? Innovation has to be balanced with risk management, and that is the role, the difficult role, I should say, of regulators around the world, not just in Africa. There are different tools to support this. And in fact, the FinTech Foundation, led by Chris Brummer, CEO, who's here out of Washington, DC, identified that there isn't a benchmark to assess the regulatory readiness for financial innovation across various jurisdictions. And so they're taking the lead, and GFTN partnering with them on developing the FinTech Regulatory Futures Index this year. You'll hear more about it throughout the conference and hopefully throughout the year. And that's just one tool. Each jurisdiction can conduct its gap analysis against international benchmarks, against its peer jurisdictions, or indeed against its own ambitions. And that way it can create a roadmap for how innovation can be embraced in the right way and for the context of that jurisdiction. Second, infrastructure and experimentation. Unlocking the potential of a technology that is moving rapidly, it comes with risks, but it has tremendous benefits, needs the right infrastructure. And I'm not just talking about hardware, software, data centers. These are very important. But also the governance frameworks, the risk management frameworks, the public-private partnerships, and the experimental testbeds and sandboxes that can allow for experimenting to uncover these risks. They're novel risks, so trying to understand what they are, but in a safe environment. But also innovation hubs, incubators, accelerators, all to encourage responsible development, yet at pace. And then the third is very important. It's upskilling and capacity building, from creating talent pipelines to institutional knowledge and skills. Capacity building has to go hand in hand with any strategy for financial innovation. And in the case of AI, understanding what these models' strengths and weaknesses are, what they can and cannot do, and what are the trade-offs that come with the various models. All this is critical for us to ensure that we know when we need to make the decision and not the machine, that we understand the role of AI agents, that we understand when the machine is hallucinating. And these are just a few of the problems that we need to look out for. Also, we are the domain experts, and no model comes with domain expertise inherent in it. And so the AI can only work if it is combined with domain expertise. So if we take all of these, and all of these three points together, we can cut through the hype, and we can confidently engage with the technology because we know that we are in control. So this is the continent's moment to innovate, to invest, and to make an impact by implementation. Everyone has a role to play, from public sector to private sector and academia, and we at GFTN hope that we can also play our role. So at this moment, I would like to thank our wonderful partners, the Bank of Ghana and GIPS, for making this event a reality. We're proud to be partners with you. Let us use this opportunity for all of us coming together, and let us collaborate with each other to turn these insights into action, into execution, thus delivering the 3 I's: innovation, investment and impact, and let's not forget the 4th I, implementation. I look forward to being part of these discussions, and I wish you all a very successful conference. Thank you.
Please help me appreciate one more time Madam Maha El Damapi, Chief Executive Officer of the Global Finance and Technology Network, for that great expose, the future-ready fintech lessons from Africa and Asia. And she's given us the 4th leg to our contemplation. Ladies and gentlemen, when we talk innovation investments, we talk impact. What's the next? Everybody, put your hands together. You were listening. And so now that we have a good overview of some working examples in Africa and in Asia, wouldn't it be nice if we have the full picture of how finance works in emerging markets? It will be proper to lay the foundation before we hear from our governors as they walk us through this conversation on regulating the next frontier, central banks, and the next frontier of digital finance. And so for 11 minutes, please, let's watch this fireside chat, the future of digital finance in emerging markets. It's a conversation with the CEO of MTN Group, Mr. Ralph Mupita. Please lend your attention to the screens.
Hello everybody, my name is Bernard Avle, a journalist here in Ghana, and the 3i Summit is very happy to welcome the Group CEO of MTN, Ralph Mupita, to this fireside chat on the future of digital finance in emerging markets. Hello Ralph, thank you for joining us today at the 3i Summit.
Thanks very much for having me here, even though we're having a virtual fireside chat. And looking forward to hearing how everything has gone in the 3i Summit. Really, I couldn't be there physically, but this is as good as it gets in our digital age today.
Wonderful. We're talking about the future of digital finance in emerging markets. How excited are you to be here today, Ralph, and how important is this topic at this time?
The topic is super important. We are seeing the speeding up of the digital economy across the world. We're seeing advances in AI in particular, fast track what we thought was possible in 5-10 years' time, and these things are happening today. As one thinks about kind of the digital economy and its expansion and its pervasiveness across the world, the timing of this conference with the focus on digital finance could not have been more important. There is an enormous opportunity for us across Africa to be able to leapfrog some of the challenges that we face, through leveraging the benefits of a digital economy and digital finance.
So for years, we've spoken about financial inclusion. From where you sit today, what tells you that Africa has moved from access to now building real digital financial systems?
I think we've gone through, probably the last 15 years of mobile money developments across markets, whether it's, you look at the progress that's been made in Ghana, progress made in other parts of Africa, particularly in East Africa, is we've seen mobile money evolve and become more pervasive across markets. User acceptance and so forth has really, there's been a massive transformation. So if you look at GSMA data sets, and you look at, kind of the transaction value for mobile money systems in particular, globally, I think it's about 2 trillion. And Africa is a big part of that 2 trillion of mobile money, the GSMA markets or the markets that GSMA reports on. And that's, in the main, what we've been experiencing has been P2P, transfers, cash in, cash out. But we're at the point where I think we're about to see a more digital form of financial inclusion. Historically, this has rested on USSD-based technology. It's been based on 2G handsets. and the services that I spoke about. But I think as you look forward, we're in the middle of a transformation for digital finance that's happening right now. I think we're going to find that this digital finance will happen on smartphones, not 2G phones. We're going to have a much more appified experience, so much more app-based digital finance as opposed to USSD. I think you're going to see more nano lending or so-called bank tech. You're going to see more remittance. You're going to see more payments. You're going to see stable coins being part, or crypto being part of the ecosystem. So we're at a point of transitioning from mobile money system to true digital finance. And I think it's going to be very exciting, and it's going to be a powerful accelerant for growth for African markets.
So you've just described the way digital platforms are now deeply embedded in financial services. But from your experience, what is it that the telecom-led platforms bring, particularly the traditional financial models struggle to deliver?
I think the traditional financial models struggle in a couple of domains. I think the first is the capillarity of the business models of traditional finance, the ability to get to the end user at a cost to serve that is, affordable to the user. We're talking about, $1 to $2.50 average revenue per user across the African markets that firms like such as ourselves can make. Now, the traditional banks and insurers would not have had the capacity to get so close to the customer. So the leveraging of the distribution and other systems that telcos have, I think, has enabled to create reach and access, the point that you raised right up front. And I think that's going to be super exciting because I think it will really fully democratize finance, number one. And I think it becomes an accelerant for economic growth. You are bringing people into the ecosystem to participate in the economy more formally, and the transactions you can see, what's possible. And I often make reference to India as a very interesting market to see the power of the digital economy to drive an economy forward. And I think we have across our African markets a similar opportunity to really accelerate growth, particularly with the youth bulge that we're seeing over the next 2 to 3 decades, where the bulk of the workforce from the world or for the world will actually come out of Africa. And digital finance has a big role to play there.
Ghana has taken some important policy decisions recently, and I know you were in Ghana, I think it was in March, and I know you love Ghana. But from an operator's perspective, what do you need to see from regulators to encourage long-term digital finance investment?
I think the first thing is we need regulatory certainty, an environment where the regulations are clear and they're forward-looking. The regulatory developments, will obviously focus on the prudential requirements, the capital requirements for driving finance forward. But I think they need to be equally matched by protecting the consumer. I think we need to enhance trust in the system, but there's a global phenomena that we're dealing with right now around, fraud and scams and the need to protect consumers. So I think all of that as an ecosystem is required to really enable a very vibrant and very responsible acceleration of digital finance across our markets.
And Ralph, the 3i Summit has people from dozens of African countries, cross-border payments, big topic, regional trade all the time. What would really need to change for Africa to move from national success stories to truly regional digital finance?
I have a vision, and I'm sure that vision is not too far into the future, which says that digital economy and digital finance is what will truly democratize and remove the physical boundaries that we have across our African markets. If you think about, cross-border payments, you often have to think about how do you convert local currencies into hard currencies like US dollars, etc., to have a transaction. We must envisage and enable a world where, a lot of the work that has been done around thinking about ease of e-commerce, ease of transactions more globally. And I know that the African Exim Bank and other institutions have done a lot of work to really pioneer kind of, payments across Africa at almost a frictionless and at scale with limited friction. So I think that world is upon us right now. And the world we're living in and the issues that we're dealing with in current times should be a call to accelerate those efforts to try and make, the African continent, at least at digital economy level, have less boundaries, less borders, and enable transactions, to flow within a very safe and secure ecosystem. So I think we're not very far away from that today, and we must encourage it.
But on a more serious note, AI is doing a lot of things, right? Fraud detection, AI is being used for this, credit scoring, customer management. From your perspective, Ralph, where can AI make the biggest positive difference in digital finance in emerging markets, and what responsibilities come with such power?
My point of view is as follows. I think firstly, the use cases for AI as we know it, it's a fast evolving foundational technology. But I think there's some no-brainer use cases here, such as fraud detection. You spoke about it. This is about inspiring trust into the system, and so forth. And I think there are going to be new use cases that will emerge, over time, as the technology advances to more powerful AI systems. There's also the use cases around customer service, and that must be done responsibly. But I think at the same time, we need to be thoughtful around the risks of AI in of itself. I think there's still human intervention required between the bookends. Digital finance must has as its foundation trust. So, and that trust must, survive human and AI agentic systems into the future.
Finally, what's the one thing you want every leader in this room to do differently in the next year to advance digital inclusive finance?
The main issue is that, the ability for digital finance and digital ecosystems to prosper and really drive socioeconomic progress is that we need to, as we're doing at the summit, is to bring our minds together around creating that balance I spoke about, around enabling innovation and protecting customers. If we can do that, I think we're going to see exponential growth and creating social conditions that will, make Africa super prosperous in the broader sense of what prosperity means.
I think the message is clear. Digital finance in Africa has reached scale. The next chapter is about at least three things: resilience, trust, and of course, regional integration. And that can only be built together. Thank you, Ralph Mupita, for talking to us at the 3i Summit here in Accra, Ghana.
Much appreciated. Thank you so much.
And thanks for watching. My name is Bernard Avle. The 3i Summit continues.
Ladies and gentlemen, a very candid conversation with insights on the role of telcos as financial platforms, the regulatory shifts shaping the market, and how emerging markets can leapfrog traditional banking models to build more inclusive, resilient financial systems, and the role of AI. Help me celebrate once more the Ralph Mupita, CEO of the MTN Group. And although he's not here, he's represented by the Senior Vice President, MTN Group. Make welcome Mr. Ebenezer Chumasanti. Thank you for joining us, sir. And so this sets the tone for this all-important conversation on how we can focus on regulatory frameworks, policy coordination, and institutional approaches that support innovation while ensuring stability, trust, and system resilience. It's about regulating the next frontier, central banks, and the next frontier of digital finance. Would you please make welcome my panelists? First, the Deputy Governor of the Central Bank of Zambia, the Honorable Reka Shifue Mahango. It's my pleasure to welcome our second panelist, the Deputy Governor of the Central Bank of Rwanda, the Honorable Nick Barija. We make welcome, ladies and gentlemen, the Governor of the Central Bank of Tanzania, the Honorable Emmanuel Mpawa Tutuba. And of course, our gracious host, the Governor of the Central Bank of Ghana, Dr. Johnson Pandit Esiama. We are honored to have the Director, Office of the United Nations Secretary General, Advocate for Financial Health, Madame Tamara Cook, to moderate this panel. Please make her welcome with a round of applause. Madam Moderator, your panel.
Thank you so much. It is such an honor to be here with you, governors. Each of you has been a leader in what we're talking about today. I am here on behalf of Her Majesty Queen Maxima of the Netherlands, who is not only the UN's Secretary General's Special Advocate for Financial Health, but she is also the chair of the International Advisory Board of the Global Finance Technology Network. So she's wearing several hats, and I'm here representing her. I think hopefully your team shared with you the questions. If not, we'll see what they have to say. But as we get started, I think I'd love to build on what we've heard this morning already. We've heard about a fourth I of implementation, but perhaps that third I that's here, the last I, is the most important, because we need to innovate. We need to, have the investment that comes with that, and we need to implement. When we unlock innovation, as all of you have done in your countries, we see the results. When we have predictable regulation and supervision, that unlocks innovation, that also leads to investment. But all of that must be underlined by what happens at the end of the day. What is the impact on our economies? What is the impact on the families that live in our economies, on the communities that they live in? And so we saw some statistics this morning around how many people in Africa have access to formal accounts and have access to mobile money. And we saw the number 40%, which is from Global Findex, but all of your countries have much higher penetration of mobile money. And I think that is really a testament to your leadership and unlocking that innovation that we've been talking about. I took down all the numbers of all of your countries, but I might leave it to you if you'd like to do that. And I think I'll just move to our very first question. So what I would like to hear from each governor, and we'll start with you, Governor, since you are our host. How are fintechs in your country? And when I say fintechs, I think fintechs can be an institution type. It can be a solution inside lots of different kinds of innovation. So feel free to speak about any use of financial technology to deliver innovative financial solutions. How are they helping citizens in your country? Can you give an example of how a fintech is helping citizens manage day-to-day, deal with risks, and/or invest in their future, which is how we think about financial health? Governor Asiama, let's start with you.
Yeah, thank you very much. So fintechs, for me, simply, these are technology firms that are helping to deliver financial services to the people. For our country, for example, yesterday I was looking at data in terms of the number of branches of banks across the country. I was looking at the geographical location as well. And it's clear that fintechs have a role. I mean, there are 16 regions in the country, and I saw a couple of them where number of branches are still really, really low. And so in terms of access to finance, we cannot depend on the traditional providers of financial services. Thankfully, technology works. Technology goes to every corner of the country. There's been a lot of momentum in the last 5 years, started around the last 5-6 years, and particularly in the last 2 years. We are beginning to see services by way of digital credit. We are seeing micro-insurance, and there's a lot of momentum. So for us on the regulatory side, our approach has been, just as I mentioned earlier, to play a facilitating role, even as we watch out for the guardrails. Even though financial stability is our number one consideration, how can we better facilitate the activities of fintechs? We are looking at the regulatory environment. We are looking at what is next. We are looking at what more they can do. Personally, my passion is about tokenization, because I'm linking it to how I can get our diaspora. We have lots of Ghanaians in the diaspora. How can I get them to invest in country? Because those flows, I need them for my balance of payments. And so the last time I met with the CEOs of fintechs, I was challenging them. And I told them, we have to do this. Help me to drive investment, through tokenization in country. It's only fintechs that can deliver. So these are some of the considerations in Ghana. We can talk more about more details later on in the chat. Thank you.
Thank you, Governor. Let's move to you, Governor Tutuba. Tanzania has really played a role in lots of different kind of innovations. Can you give us some examples from Tanzania, how fintech has helped people really improve their financial health?
Yeah, thank you very much, Madam Moderator. And I would like to take this opportunity, first of all, to express my sincere appreciation to my brother, Governor Johnson, for the hospitality that you have accorded to me personally, as well as my delegation from Tanzania. Yeah, so for the fintech in Tanzania has been considered as a critical platform where even in our Vision 2050, we have provided a specific slot to recognize a fintech as a part of enablers to development aspirations. So even in our 5-year development plan as well, we have taken note of the fintech, because we usually consider this fintech as a key platform which continue to expand services and enable other key players in the economy to use different financial services and ensure even to access different platforms. And remember, in 2023, we conducted a FinScope study where we observed about, by then, 76% of people had were included in the financial services. But after that now, we observed that there were like 5 groups whom seemed to be financially excluded. Then these were like women, especially in rural areas, people with disability, youth, especially those below 18 years, smallholder farmers and fishers. So then we put in place a comprehensive arrangement where now key players in the financial services, we agreed to develop different modalities to reach out to those people. And for now, we have seen, especially in the remote areas where these fintechs have continued now to increase accessibility, usage, and availability of financial inclusion of financial services to different segments of the population, including underserved communities. So in terms of these services, we have seen there are different platforms where a number of key players are offering insurance services. Some of them, they can have access to payments of these bills, or even for merchants, they can have access to normal payments. And for us as a central bank, during the after that analysis, we realized that there were a number of mobile money service providers who used to have expensive services. So we decided to develop, we call it a Tanzania Instant Payment System, because in Tanzania we have 6 mobile companies. Now, cross-transaction were somehow expensive, and when we developed the TIPS, we call it TIPS in abbreviation, means Tanzania. We have now enabled to lower some transaction costs, because we provide that service for free, and it can enable one service provider to reach out to another service provider by using their mobile phones without additional costs. So by doing so, currently we have now came up with a number of products. For example, we have M-Pesa, where a person can enable to transact for payments of merchant and the other normal utility bills. For example, we have like M-Bima. Bima means insurance. Person now can reach out or can pay their insurance services without additional cost from one platform to another. We have like Empower, where if you want to maybe to transact, if you don't have enough credit, enough balance, still you can get an additional. Of course, it's in a form of credit, but you can still transact it through for particular transactions without having any challenges. We have, for example, as M-Pesa, where a person can pay normal bills without any challenge. So there are a lot of issues where we have seen fintech being able to easy and ensure all those transactions being channeled through without having any challenges. And just within 3 years, we have now seen the level of financial inclusion has gone up from 76 in 2023. As of December 2025, we have now reached the level of 83% of financial inclusion, because each key stakeholder had a number of initiatives that we agreed, all of us, even the government committed itself that they will ensure to electrify the entire country. So all the villages, Tanzania will have about 13,000 villages. So the government has already electrified all the villages. Internet connectivity has already reached all the villages. And up to this moment, I can say that we are in a good move where we have continued to embrace and ensure fintechs are being used by everyone in Tanzania. Thank you very much.
Thank you, Governor. Let's move to you, Deputy Governor Barige. Give us some examples from Rwanda. What are you seeing the fintechs are doing to really help people beyond payments for these other services?
Thank you. Good morning, everyone. And let me also take a moment to appreciate the Central Bank of Ghana. Governor, thank you for your leadership. From Rwanda, we appreciate the collaboration that we have with the Central Bank of Ghana. Now, coming to what we are seeing in Rwanda, I want to share that from onset, fintech is no longer evolving. It's embedded in Rwanda. It's embedded in the way we live our lives. It's embedded in the way people transact. It's embedded in the way businesses run. Now, you asked how beyond payments. I was just looking at statistics that we have at the Central Bank of Rwanda, and when I look at total loans, new loans issued as of March 2026, close to 40% of the loans being underwritten by banks using and partnering with fintechs, 40% of new loans issued have been issued using fintech. And that's commendable. We are talking about moving beyond innovation, investment, impact, and now implementation. So it's good to see that we are enabling using fintech to see how businesses transact, to see how intermediation is being done, and 40% is a milestone. It's something that we find commendable. Now, I want again to speak about implementation. In Rwanda, we are seeing that fintechs are moving beyond borders. And it's why I wanted again to commend the Central Bank of Ghana. In the second Inclusive Fintech Forum, we signed an MOU with the Central Bank of Ghana to see how we facilitate. And this speaks again to implementation, because we are seeing fintech moving beyond borders, whereas regulation is still fragmented. And together as two central banks, we are working to see how we facilitate a fintech in Ghana to come and operate in Rwanda, how a fintech in Rwanda can operate in Ghana. In the Inclusive Fintech Forum that we had in February this year, we've extended it. We signed an MOU with the Central Bank of Kenya. So my expectation is that we continue to create this coalition of the willing of central banks to be able to facilitate fintechs that are working beyond borders so that we can have harmonized implementation. I think those are the two use cases that I would want to share at the moment. Thank you.
Thank you, Deputy Governor. And last but certainly not least, it's nice to have two women on each side of the panel. Deputy Governor Mango, how are you seeing in Zambia that fintechs are delivering value for your population, managing day-to-day, dealing with risks, investing in the future?
Thank you. Thank you for the opportunity. And again, I also want to add a special recognition to the Bank of Ghana. I think they've set the tone in this area of fintechs. We have learned quite a few lessons as well from Zambia. With regards to fintechs, I think the drive has been and the growth has been exponential in Zambia. When we look at where we're coming from, where we're at, and obviously focus is where we're going. We have seen growth. I know when COVID came, it was very destructive. But out of that, I think a lot of good things have come with regards to fintech development and also how we have evolved as an economy. We are seeing now fintechs as one area that is really tied to economic growth in Zambia and also helping the underprivileged and also the underserved economy to be part of the whole financial ecosystem. We recently published our financial scope survey of 2025, and in that survey, it shows that mobile money usage rose from 58.4% to now 76.1% over 5 years. And you'd agree with me that these numbers are really quite, it's showing a growth path. And again, between 2025 and, between 2020 and 2025, the number of active electronic wallets doubled from 8.6 to 17.2 million. And I'm talking about a population of slightly over 20 million. So in terms of the inclusion agenda using fintechs, we do have the statistics, we do have the numbers to show that this is an area which is really on a tangent of impact and ensuring that we don't leave anyone behind. Fintechs have really evolved in Zambia. I think, as alluded to earlier in earlier speeches, we have fintechs now offering savings, credits, insurance, pensions, and also investment tools. With the informal sector, we do have, for instance, daily loans where a marketeer is able to borrow, buy goods, and then also sell those goods and be able to pay back the loan. I think this has also seen us increase the number of growth in terms of MSMEs, as well as ensuring that the financial health of different households now is at a different level. So all in all, I think with regards to fintechs in Zambia, this is an agenda which, from the national level to also central bank, we have seen exponential growth. And we are working on a regulatory environment that will enable this innovation to continue without leaving anyone behind. Thank you.
Thank you. What great examples we've heard about how your countries have moved beyond payments to offer many other solutions to your populations. I think the penetration of those services still lags behind that of the accounts and the payments, and so I hope next time we're together, we'll be at the similar levels where everyone is using the savings and credit and insurance and pension services to really help them, and that's kind of one of the challenges before us. So I shared with you that the next question I'd like to ask each of you, and this time we'll start with Tanzania to mix it up a little bit, it is what is one policy solution you have implemented to enable what we're talking about today? And what's one challenge or one surprise you're currently facing? And it's okay if you don't know how to solve it. That's why we're here together, to help solve these problems together. So one solution and one challenge, Governor. We'll start with you, Tutuba. And then we'll come to you.
Yeah, thank you very much. Of course,
I'm innovating by, mixing up the order. Is that okay? Go ahead, Governor.
Yeah, thank you very much. Of course, in Tanzania also, Bank of Tanzania usually acknowledges often these are financial innovations that have been moving faster rather than even beyond the normal regulatory and supervisory frameworks. So we usually looking forward to see how we can strike a balance, because as a central bank, our core mandate is, among others, to ensure financial stability. But now, during the course of these innovations, we need to strike a balance between financial innovation and the consumer protection while we proceed with our normal obligation. That's where now we usually find different ways to address these challenges. But in the current situation, we established the fintech regulatory sandbox, which actually enables innovators to test financial solutions in a live environment within a limited space of under the supervision of the bank. Because we have about 3 years now since we established the fintech sandbox, we have witnessed about 63 innovators, and we created like an incubator where we also provide some funds to support those new innovators and the startups. And I remember about 2 weeks ago, I approved the 3 products just to enter in the market. So we have been striking a balance based on our mandate, but at the same time ensuring that those innovators who are coming out, they can come up with their products and enter the market without creating any challenge. So one of the key challenges that I can have witnessed as of now is the limited access to financial data, because it seems there is a mistrust between these new innovators and some of the maybe financial users or those who can provide the data. So in different times when these new innovators come up with their products, there are people who are hesitating to provide those data, or they can even scare to accommodate them in their normal platforms. We have seen even in the universities, for those who are pursuing ICT programs, when they are applying for maybe field for studies, there are some companies that are hesitating to take them. They can feel that, okay, once they invited them in their good institution, they can hack some data. So there is like a mistrust, but we have continued to support them and ensure at any period of time when they can have data. For us as a central bank, sometimes we provide our own data in a special guidance to test their products if they can meet the needs of the market. But up to this moment, I think the most critical problem is aligning on access of data. That's what I can contribute at this moment. Thank you very much.
Great. Let's move to Rwanda. Can you give us one solution you've implemented and one challenge you're currently facing?
Thank you. In terms of policy, it's been around the need to ensure that matches with trust. So with the Central Bank of Rwanda, a couple of things that we've done. One, appreciating that financial inclusion in Rwanda is around 96%. But when we further look into the data, we see still a gender gap. Now, the Central Bank of Rwanda has been at the forefront of creating financial literacy that is targeting women. And we've been moving around the country, creating awareness, but also financial awareness, but also creating transparency. And we introduced a digital tool that we call Gereranya to enable users to be able to compare pricing of financial products across different institutions. That's one thing I would speak to. Now, in terms of challenge, as I mentioned, we see that innovation is moving beyond borders, but regulation, it does not. So that's the challenge that we see in Rwanda, that we are grappling with. We are reaching out to peers, central banks, and saying, how do we address this? How do we facilitate this? And we appreciate the collaboration that we have with other central banks in trying to address this challenge. It's ever growing, and it's a challenge we're dealing with as a central bank. Thank you.
Great. Let's move to Zambia. One solution you've implemented, one challenge you're facing.
In terms of one of the solutions that we've implemented in Zambia, obviously we saw the need that it was important that there was interoperability and also reduced market fragmentation. I think like GIPS, Ghana, we do have our national financial switch, which is really at that level of ensuring that we have seamless payments across persons, banks, and also wallets. With this innovation, I think it has allowed the space to grow, obviously with having at the back of the mind the need for consumer protection, as well as safeguarding the other issues of cyber fraud. So this has made it very convenient for the consumer. I think we've also seen high usage in this area and the reduced usage of cash, together with other interventions in terms of digital financial services awareness that we carry out countrywide. I think like Tanzania, the regulatory sandbox has also helped us. It was implemented in 2021, and we have tested 4 fintechs, which have actually proven that it's important to have that controlled environment before you actually roll out certain products and services. Then one of the challenges that we are currently grappling with is this, the growth in virtual assets. I know a number of our sister central banks have made headway in this area by coming up with regulation. I think this is an area where we are still at infancy. We have frameworks, but we are yet to have strict regulations on how to grapple and handle this issue. So one of the areas that we're looking at as we look at this challenge is how can we have a phased approach, and in terms of how do we get to regulate this space. So those were my 2 opportunities, what we have done in terms of the policy issue and also what we're grappling with being virtual assets. Thank you.
Thank you so much. And now let's come back to our host. Governor, what is one policy solution you've implemented, one challenge that you're grappling with now?
Yeah, so You know, one area we've always sort of looked at where we think fintechs can help is to do with private sector credit provision. If you look at the data in real terms, you would notice that we've been lagging behind our peers. We are doing just around 10% of GDP. Our peer countries are doing 3 times that, others are doing 5 times that. So it is in our interest, you know, through fintechs to increase private sector credit, you know, microcredit schemes and the likes. But we noticed that there were abuses. There were all kinds of, you know, harassment by people who defaulted and the likes. And so recently we had to issue a set of guidelines, you know, to clean up the space. We believe that the guidelines will help to streamline activity. But you see, it leaves another challenge. What we noticed is we also have to scale up on knowledge of financial technologies. There is some level of illiteracy when it comes to, you know, financial technologies, and so we will need to do a lot of financial education across the country. Even to do with the financial technology itself, you know, our people out there to be able to use the smartphones, to be able to operate them in ways that they won't take advantage of them. So yes, we have, you know, introduced those guidelines and directives. We expect it to work, but we've also noticed that there has to be a lot of financial education. I believe we can win that also. Sometimes I just observe our market women, you know, playing with their phones, and I'm hopeful that we can train them. We can enhance the level of literacy among the rural folk. It will go a long way to help, where young people out of school can access credit on their own. You know, they can try their hands. People who have gone to learn trade can buy little tools to set up their own shops. It is something that the central bank is interested in pushing, but clearly it's emerging that we still need to address the problem on other fronts.
Thank you, Governor. I feel like we could spend the rest of the day talking about the issues that all of them have brought up. Please, yes, join me in thanking for that. We've heard about price transparency. We've heard about education, digital literacy. You know, you said playing with your phones. The evidence shows that learning by doing is the best way to learn, right? So giving people opportunities to learn about finance, to learn about fintech when they need it, where they want to use it, when it's actually adding value to them. That's how you increase that literacy. You talked about stability. You know, evidence shows that when families are more financially healthy, it also increases economic stability. And so it doesn't have to be a trade-off, right? It can be mutually reinforcing. You know, the issues around frauds and scams and regulation across borders, so many different things. We've also heard so many excellent things from the opening speeches and fireside chat. So I'd love to give each of you opportunity if you would like to respond to anything any one of the other panelists said or one of the speeches this morning. I think we have a little bit of time. Does anybody want to react or respond to anything you've heard today, this morning? Go ahead, DG.
I think there's something the CEO of GIPS mentioned, and Madam, it's really stuck with me. The example you gave of the woman in the marketplace. As I feel, and this is to everyone here, the challenge that we have before us, mainly for fintechs, is to think about that woman. I feel the focus needs to be on the value, not just the valuation of fintechs, to keep in mind households and small businesses, to say how do we create value, how do we sustain trust. I feel those are themes that are emerging here that I wanted to speak to affirm that the fintechs that are in the audience need to constantly bear that in mind. What's the need in society that we are speaking to? How do we address it in a way that it creates trust, in a way that it creates transparency, in a way that it creates impact. Thank you.
Great. Anyone else? Go ahead, Governor.
Yeah, thank you very much. I have taken note of the sentiments made by Her Excellency Vice President during the opening remark when she mentioned a number of key issues. And as I spoke earlier that in Tanzania, we took on board some different issues and we had a very good arrangement where different key players, we sit together in the same room and try to brainstorm and see how we can enhance this fintech to become as enablers of other economic activities. And in our case, based on what Madam Vice President spoke here, was on the moment where the government and other key players can put in place good regulatory framework, and the other key players, either they can support in different ways, including the issues of infrastructure. Because for Tanzania, I saw when the government made a commitment to electrify all the villages and ensure network connectivities be available throughout the country. We have the government made a commitment, allocated resources, and has really made it. And you have seen now, that's why I said in my area discussion that just within 3 years, we have seen financial inclusion has increased by almost 7% from 76 to 83%. And all those whom we found to be financially excluded by that time, we came up with specific arrangements which now took them on board, and with the collaboration with other key players, they come up with different products that were really targeting those groups. So I hope in terms of expanding services to ensure that everyone is not left behind, we can just make it by incorporating all key players in this journey. Thank you very much.
Go ahead.
I think what resonated for me was the presentation by the partner from Singapore. I think there was a lot of statistics that was presented to us this morning. And it got me thinking that, yes, we are making a lot of strides. We have the right leadership, I think, in Africa to go beyond in terms of improving the financial health for the continent, for all our people. I think what also struck was the need for us to leverage on AI tools to just get that data, and from the data create or implement policies that will help us on this agenda, so that we have an inclusive without leaving anyone behind, and also just to ensure that as a continent we look from within and we connect our systems within us to ensure that even on scale in terms of costs, that is reduced as we innovate more products in the financial technology journey. Thank you.
Great. Governor, any reactions?
Well, listening to some of the speakers, it's clear that fintechs have a huge role to play. First, in promoting financial inclusion, generally, whichever services. And we are looking forward to listening to the experiences of our peers. We want to see what we can do more beyond where we are currently. But we are also interested in the role of fintechs when it comes to cross-border payments. Rwanda has confirmed we have an MOU with them. We are looking at other MOUs as well. There's a session for governance. There's a roundtable just for ourselves. We want to see what more we can do. So we are open. We are open. We think that through technology, through fintechs, we can achieve some of the aims, some of the things that have eluded us for so long. we can use fintechs to accelerate that. But of course, as central banks are, we cannot compromise on our financial stability goals. We'll keep our eyes on the guardrails, but at the same time, we'll work with fintechs. We'll look at our regulation. With us, I was discussing with my head of fintech the other day, and I said, you know what, I want to have a separate legislation for fintechs. You know, we regulate them currently under the Payment Systems Act, and I said, no, can I see more dynamism? Can we have a separate law just for fintechs? So that's the idea, thinking about what next, what more can we do? How do we, extend the boundaries? And for me, that is what this conference is about. We are open to learn, we are open to share ideas. Thank you.
And congratulations on your partnership, on the collaboration on the passporting. Hopefully by the end of this session, we'll have more of these examples. You'll have inspired more of this kind of collaboration. Governor, I loved what you said in your speech, which was, access must translate to value. We have to make it count. And I think that conversations like this are a good example of this. Well, I think that we are running out of time. I prepared you to try to come up with a soundbite that you'd like to close with. I often find that sometimes it's nice to just have something succinct at the very end. So as you gather your thoughts to remember what your kind of last parting shot is going to be, I asked you each to think about how would you like to challenge the next generation of fintechs to deliver more value or impact, that I from the 3 I's, in your country. Let's start at the end of the row with Zambia.
Inclusion gains alone are not enough, so resilience and long-term well-being must improve. I think the challenge for fintechs is to move beyond scale and speed, and also to focus more on impact and use, ultimately. Thank you.
Excellent. Please, yes, I think that deserves a hand clap. Rwanda, let's hear yours.
Something that the Vice President mentioned, I think the challenge is to fintechs, as you scale, it's important to recognize that trust is your most important infrastructure.
Great. We've heard a lot about trust this morning. Tanzania.
Yeah, thank you, Anna. From my side, I see the challenge might be on building trust and confidence, because throughout, at the moment once you want to transact, you need to have trust and confidence on the systems that you're really using. But now, sometimes citizens may lag behind from these products, and you have seen a number of startups and innovators. They come up with the products with the assumption that everyone is conversant to it, without even testing the level of understanding, the level of knowledge of the users. So when they are developing these products, they need also to think on the way users can have access to it, and avoid some sort of fraud and cyber risks, because for users, they may continue to hesitate and have feelings that probably they can lose their money. So the issue of trust and confidence in the products that are used to be developed, I think, is also key. Thank you.
Trust and confidence. I think those are 2 important words. And finally, our host, what would you like to leave us with?
Yes, so for us, it's about innovation. It's about identifying the problems we have as a country and designing solutions to these. And I believe it is a consultative approach. We have to talk to each other. So last week or so, or 2 weeks ago, I met with all the fintechs CEOs. We had breakfast together, and we had a good time listening to them and they listening to us. And I told them from now on, every quarter, we will have 1 breakfast meeting just to listen.
too often I find that innovation is for innovation's sake. And what you talked about is understanding the problem first and then bringing the solutions. And I think that is so important and such an example for fintechs. Well, it has been my honor to be with you on this panel and to moderate this discussion. As I said, I think we could keep talking all morning, but please join me in thanking this fabulous panel on the frontier of fintech.
And help me thank our able moderator, Madame Samara Cook, for such a masterful moderation. How about a group photo right there in the middle? And that has been a very robust conversation on regulating the next frontier, central banks, and the next frontier of digital finance. And shortly we shall have a presentation on inclusion, but before that, let's appreciate our partner, the Ghana Interbank Payment and Settlement Systems, with a video.
Every day in Ghana, millions of movements unfold, powered by something greater. But behind every tap, every transfer, there is a system working quietly in the background. This is where GIPS comes in. The Ghana Interbank Payment and Settlement Systems, the backbone of Ghana's digital payments ecosystem, powering interoperability, connecting banks, fintechs, and institutions, enabling seamless transactions across platforms.
Welcome to the world of GIPS. GIPS was established by the Bank of Ghana in 2007 to partner financial services industry to develop and manage efficient and secure payment systems. Our role is simple, yet critical to Ghana's payment transformation. We provide interoperable infrastructure that connects banks, fintechs, mobile money operators, enabling them to deliver digital payment services to their customers.
GIPS is an enabler, a trusted infrastructure built to connect everyone. At scale, the impact is undeniable. Millions of transactions processed daily, a rapidly growing digital economy, an ecosystem expanding across every region. GIPS is not just enabling payments, it is driving financial inclusion, fueling innovation, and strengthening trust in the system, empowering fintechs, supporting financial institutions, creating opportunities for millions. And the journey doesn't stop here. GIPS is ready to connect beyond borders, to integrate with switches across Africa, to power the future of payments on the continent.
The future of GIPS is to be the enabler of choice to our partners. We will continue to deepen our role as Ghana's digital public infrastructure, powering seamless, real-time and interoperable payments at scale. We will build resilient, reliable infrastructure that enables banks, fintechs, mobile money operators, as well as digital asset providers to innovate and expand their businesses. Ultimately, GIPS will remain the platform connecting the ecosystem, driving inclusion, efficiency, and the future of digital financial services in Ghana and beyond.
Ghana Interbank Payment and Settlement Systems. Because when payments work, economies grow, businesses thrive, lives improve. Partner with us, build with us, connect to Ghana's trusted payments infrastructure. Ghana Interbank Payment and Settlement Systems, GIPS.
And while theirs is a beautiful mandate of implementing and managing interoperable payment systems infrastructures for banks and non-bank financial institutions in Ghana, his and that of his institution is a labor of love of doing so for the entire continent. It's the Mike Ogbalu III who joins us. Thank you. Let's now talk about digital financial infrastructure, which is becoming central to expanding access to credit and financial services. What we want to have now is a presentation from Jumo and their approach to building scalable systems that support inclusive financial access. Would you please make welcome the Group Chief Executive, Mr. Paul Welpton.
Good morning, ladies and gentlemen. Thank you, Dr. Asiahama, for being such a great host. It's really an honor to be here. As I stand here today in front of all of these incredible industry leaders and talking about digital financial services, I can't help but go back 10 years when we came here for the first time. And I recall sitting at the Bank of Ghana with our partners, MTN and all of the banks, talking about a dream. And a dream well before the era of AI we are today. We were sitting in that room talking about machine learning and credit scoring through artificial intelligence, but it was purely that, only our hypothesis. And through collaboration, I stand here today very proud knowing that we are now in 10 countries doing $300 million a month, and that Ghana is truly the flagship that started all of that. It's that flagship that we use to show some of our other partnering countries how to do responsible digital credit finance. I think we cannot start, and I'm so glad that the Honorable Governor of Rwanda said we have to start with the customer. That is incredibly important to us. When we look at back at our journey, this is really where it all starts. So what we have on the screen here is Ms. Regina Ogu, one of our customers that has been with us for 9 years. And we see an extraordinary journey where a customer that started with small loans just as emergencies morphed into an SME, a business where she's a jewelry seller, she's employing people, and truly an SME 10 years later. And that's only possible through partnership and collaboration, and it's the core of what we do. Fintechs often get valued on how quickly they scale and grow, but I think it's important that when we work together as a team and as policymakers and partners, that we focus on our customers and the end users that we're all very passionate about. So we often hear the words, it takes a village to raise a child. There's so many of these metaphors. But for us, truly, when we look at the data of Regina, it's a story that I can't tell you how much work from everyone in this room that has to be. Without a mobile network that gives you payment rails and interoperability and the ability to disperse into a loan and collect from, that won't be possible. If you look at Regina's journey, you'll see she's been funded by 4 banks. We believe that it's impossible for one balance sheet or one funder to do that. We don't believe in disruption. We don't think it's a market you should capture, but we believe it's important to help a customer through their entire journey in open competition. If you look at the big spike on the graph here, that is when Miss Regina went through a tough time. It took her 356 days to repay her loan. But through very collaborative policy making with the Bank of Ghana, we've implemented a structure where there's no penalties and no punitive compound interest on a customer of this nature. And that allowed her that only after her 4th loan, she came back into the system, and it gave her the ability to grow her business to now 6,500 cedis a month. That is an incredible feat for one customer to do. And if we start focusing and zooming out on how many of these customers we've served, you will see the incredible impact that collaboration on policy making, pricing, and most importantly, partnerships with local institutions, all of the banks that are here today, and of course our telecommunication partners. So let's fast forward to today. Where are we in Ghana? Almost 11 million people served through all of these partnerships. We've done 66 billion cedis of disbursements to these customers. That's almost 3 loans every second. So as I've been standing here talking to you, we have real Reginas in the market accessing their loans in real time. Now, we've traveled the world to see best practice and see how digital credit works, and we truly believe that there's nowhere else in the world that we see this level of interaction like we see in Africa, and specifically in our flagship Ghana. 3 loans every second. I think Importantly, risk needs to be low. So even with all of that access and all of that lending going on, we see only 3% default rates. And that is because we've got incredible partnerships with our banks and with the regulator, making sure that we stay within those boundaries. It's important that we get to as many people as possible, but we have to do that responsibility. We've spoken about education a lot today, and we feel that is the most important part of financial inclusion. I think what Regina's story showed us is that even if someone defaults on their first loan, if you treat them fairly, you don't outprice them into the market so they never return, they could come back and 9 years later be an incredible customer that all banks and funders can benefit from. So how did Ghana succeed, and why is it the flagship? It really is what our honourable host said this morning about open collaboration. We got here 10 years ago and we started the conversations with dreams and innovation. We learn from each other. But if you see and you look at this graph, it is truly the only way we get to scale as all fintechs on this beautiful continent. Of course, we will have bilateral relationships, as you can see depicted on this image, and we will have to talk commercial terms with individual partners. We get regulated by the fintech office as a fintech, and those are bilateral. But it is truly in the middle where we all have open dialogue about the growth and how we want to move forward, where the magic happens. And that is really the flagship hypothesis that Ghana has proven that we want to transfer to the rest of the continent. So let's use a real-life example of how we did that very recently. I think pricing, specifically in digital credit, has always been one of the points and most talking about points. And recently we had open conversations with the Bank of Ghana, all of our banking partners and our telecommunication partners about how do we see pricing of the individual versus an ecosystem. Now we know we've never compounded and we don't believe in that punitive interest, but there is an argument to say, should customers' prices reduce over time? And what is it that you're ultimately trying to do? Are we trying to get Regina to a 1% interest rate? Or are we trying to create more Reginas? And that was a question that we posed to each other as we worked through this. And what this example shows you is the incredible resilience of a collaborative support through very highly stressed times. As you can see there, we had almost 1 million, oh no, I've gone 1 to 4. Apologies. As you can see there, we've gone from almost 1 million new customers onboarded every year through deep economic stress and the fluctuation of inflation and the cedi dropping to only 600,000 customers in 2022. And that's when the conversations became very critical, is to say, when liquidity dries up, how do we solve this together? That's why the multi-bank and the multi-partnership model is so important. Because we understand that there are certain players that will be in for a certain point of time, but circumstances change. Risk appetite change, and we need to make sure that at the end of the day, Regina is always protected. So we worked together with the central bank and approved 3 new products that went onto the menu through our system, and we started creating that buffer. Created excess capital that means that we can sustain the access we once gave. Because more importantly than access is the sustainability to not let that customer grow. And as you can see, as the economy started bouncing back, we've taken all of that excess capital and onboarded new banks and more funders, and we've grown that to now 2.3 million new customers included on the financial system. That is in 2025, people that have never had a loan coming on for their first loan. And they are now part of the 11 million Reginas that we've already served. And this is an incredible example of how all stakeholders in this room work together. We can move forward even through the toughest of monetary policy times. I'm going to leave you today with a few interesting observations of how we've developed financial inclusion together. So the 3 pillars that we believe in is really access, its usage, and its resilience. I think access we've proven together, specifically in this beautiful country, that it is possible to use alternative information. It is possible to use partnerships and open collaboration to give millions and millions of people access. And we will continue doing that. I think usage is proven. We can see someone like a Regina 9 years later 104 loans later, only spending 16,000 cedis over a 10-year period of interest and building a business even after she defaulted. We see that we've got usage, and it's a rich, very data-driven approach of understanding our customers. But the question is resilience. How do we keep and protect this? How do we open this ecosystem to competitors? How do we make sure we've got all banks that want to contribute into this and we don't close the system? How do we use our regulators? How do we use policy to build this resilience? And then more importantly, how do we transfer this knowledge to the rest of this content? I want to leave you today with a question, which is my mission as the CEO of Jumo, is to say, how do we work together to serve the next 100 million Reginas on this beautiful continent I call my home? Thank you.
One more time, ladies and gentlemen, Mr. Paul Whelpton, the Group CEO of Jumo. In answer to that question, let me escalate it and say, how can we empower the 1.4 billion Africans? Is that something we're interested in doing? Then for the next few minutes, let's have an insight from the Secretary General of the Africa Continental Free Trade Area Secretariat on digital finance as an enabler of continental trade integration. Please lend your attention to the screen.
Governor Esiama, distinguished ladies and gentlemen, let me start by appreciating the opportunity on behalf of the AfCFTA Secretariat to present this message of support for the 3I Summit 2026 edition. The AfCFTA marks a bold reimagining of Africa's economic future through the creation of a single digital market. In order to enable us to achieve this ambitious objective, the heads of states of the African Union adopted the Protocol on Digital Trade. Investing in digital infrastructure will require concerted efforts by the private sector, central banks, the African Union, in order for us to make the necessary interventions and deploying digital technology to advance integration of trade in Africa. In this regard, the policy dialogue that has for some time approached digital payments and fintech innovation as if they are complementary to trade is proving not to be true. That framing is no longer sufficient. Investing in digital infrastructure is not just a supportive element in reaching an integrated market, it is increasingly proving to be an operational backbone that is required to achieve market integration. The persistence of high transaction costs, the cost of currency convertibility, settlement delays continue to constrain accelerated intra-Africa trade more than the presence of tariffs. In some trade corridors on our continent, the cost of moving money still exceeds by far the cost of moving goods. We must urgently address this imbalance by deploying digital technologies. Recent efforts in this regard, including the rollout of the Pan-African Payment and Settlement System, which enables payment in local currency on a digital platform, has the potential to reduce transaction costs, and indeed, it signals a recognition that trade must evolve with digital infrastructure as the anchor. The strategic question is no longer whether investing in digital infrastructure matters or not, but whether it is being deployed at the scale and the coherence that is required to support market integration. Evidence demonstrates that companies that deploy digital payment systems, for example, are more likely to engage in cross-border trade and are more likely to reduce the costs associated with currency convertibility and are able to better manage challenges related to payment verification and settlement risks. This has direct relevance for the AfCFTA and for enhancing intra-Africa trade. We know that in Africa, intra-Africa trade is driven largely by small medium enterprises, youthful entrepreneurs, many of whom operate across borders and in semi-formal and informal contexts that require efficiencies in order to scale. Without accessible digital payments systems, these drivers of Africa's economy will remain excluded from the broader market and will not be able to achieve economies of scale. It is precisely in this context that the AfCFTA protocol on digital trade becomes pivotal. The protocol seeks to address the constraints that existed for some time that include, amongst others, constraints related to market access, cross-border, regulatory convergence, trusted cross-border digital transactions, protections of digital personal data, etc. By the next edition of the 3i Africa Summit, the measure of progress should be not additional declarations, but tangible outcomes that demonstrate functioning cross-border payment systems, for example, measurable reductions in transaction costs based on deployed technologies, increased SME participation in digital trade, custom systems that are digitized, and as I've mentioned earlier, the digitization of payment systems. All of these efforts will require collaboration between central banks, the AfCFTA Secretariat, and the African Union. We stand ready as the AfCFTA Secretariat to partner with all of the relevant stakeholders to ensure that the ambitious objective of digitizing Africa's economy is within reach. I want to thank you once again for the opportunity, and I wish you very good deliberations. Thank you.
And if His Excellency Wamkele Mene, the Secretary General of the AfCFTA, calls us to actionable outcomes, it's because he and his organization have led the charge. Ladies and gentlemen, it is worthy of note that the protocol on digital trade, women and youth, is the first of its kind in the whole wide world, and was achieved right here in Africa. Please. To this end, we ask a very simple question. What's the next frontier going to look like? How does it begin? Where is it going to begin from? We're going to ask ourselves how to outline priorities for scaling solutions, strengthening ecosystems, and sustaining momentum beyond the summit. This or these we shall do in our breakout sessions. But here to flesh out the lessons learned from this opening ceremony and to charge us to go into our breakout sessions is the First Deputy Governor of the Bank of Ghana. Please make him welcome for his keynote, Dr. Zachary Momoni.